I'll make a start then. I am recording this as well, so this presentation will be available on our website and on the YouTube channel too. And the presentation I'll send to everyone who's attended as well, and I'll also have it available on the website too. Any useful links will be in here too, and that I'll go through. So the main reason I wanted to do this was that I was having a few clients coming to me and being worried about the situation, what's happening, and cash flow being a key thing for any business. And they were feeling the effect of asking for money. So some felt awkward in that everyone's feeling this pressure, everyone's feeling the pinch on cash, and people are holding back money. And holding on to cash, and people are worried and about asking for money and feel uncomfortable, or should they ask for money, or ways to sort of try and get the cash flowing back into the business. So I thought, well, it might be useful to do a webinar to help clients, but also do a presentation that they can refer to, and just have some tips as well that I've used. Now, being an FD in small businesses, credit control would often fall on my shoulders. So I've done a lot of that. In fact, one of my first ever jobs was working in credit control and finance. My mother was head of credit control for a large American company. She got my first job in an accounts department. So I've learned quite a bit in credit control. So I thought, well, if I could share some tips, clients and other people might find it useful, and just some of the tools as well, and products that are available. I thought I'd let people know about those, because there are some really useful things out there to help you collect cash. So the presentation, as I said, will be available post this webinar, and I'll put it on my website and I'll send it out to everyone. Just going through the agenda. So what we'll do, we'll assess the business situation. So it's important to look at your debtor book in your business. Then we'll go through 8 tips for cash collection success, and then some tips on how to gain confidence when you're asking for cash, and then just a wee slide on how we can perhaps help you do this and make this process easy for you, and also some tools and products and services that might be able to help you with collecting cash. So, how not to collect money? I know I sent this invite, this picture with the invite, and I was FD for a recruitment business, and he wanted to send that picture to someone who owed him money. Said, this is my FD, so you better pay me. So this kind of thing, this kind of aggressiveness doesn't really work. I think it just gets people back up and trying to chase quite hard. I mean, there will be situations that you need to, but I think one of the things I learned is that if you sort of go in like a bull in a china shop into collecting money, it just gets people's back up, and it's not the best way to do it. So, I think we'll touch on later how really credit control should be an extension of your customer services. So the first thing on the agenda was assessing your business. And this is important to do, garbage in, garbage out, making sure that your records are up to date. Before you can really assess the business situation, you have to have your books and your debtors ledger. And the debtors ledger shows you who owes you money. And there's no real point trying to work out an action plan when it comes to collecting debt and cash flow if you don't know what you're owed or how old the debt is. So, there are tools out there which you can now use to keep a real live view of your debtors. We use with all clients a software package called Zero, and it brings in a live feed from your bank. and you can keep up to date with your debtors and mark them as paid, and then you'll get a real time view of who owes you money. So it is important keeping records up to date, and nowadays there's a lot of good software there to help you to do that, and we'll mention some later on. But you know, if you're not using any cloud software and you want some help in going to the cloud using a software tool like Xero, then you can email me direct and we can help you with that, no problem at all. Just wanted to briefly look. Now, most of you may know what this is, but I just thought I'd cover it for the purposes of the video as well, in case someone's watching this who doesn't really know what an age receivable summary is. So this is just an extract from a demo version in Xero, an age receivable report. Some people call it debtors report, and this will show you who owes you money. So you'll have, you know, the list of your customers, and how to read this. It phases it into the age of the debt. So current, you would look at that and say, well, that's everyone that's within their payment term, so I'm okay with that. This then will show you 1 month after the payment term, so that's a month overdue or within a month, and then it's over a month and over 2 months, 3 months and older. So anything towards the right of current really is what you should be focusing on. And as long as that is up to date, as I mentioned before, then that's a useful tool and to use every day to collect your money. If you don't have this up to date, you know, you can really annoy your customers, asking customers who've paid you for money. Just really gets the back up. So I'm just going to jump into now. So 8 quick tips for credit control. I'll talk through the process. There is a question and answer box there. I'll answer those at the end if that's okay, but feel free to type them as I go through the presentation. So the first one I've touched on there is checking your sales ledger. So it isn't a large job. I mean, if you've got hundreds and hundreds of thousands of debtors, then it may be, but you've probably got your own credit control department. For most small businesses, you know, probably doing it yourself or your admin person or a finance person in the company. But really, if you've got something like Xero, let's bring in a live feed of your bank every morning. I do it just by sort of a routine. Just spend 5 minutes in the morning, review sales ledger, and just marking everyone who's paid and flagging up which customers approaching on missing payment deadlines. And that will help you plan your time effectively to collect that. I touched on there, it's important that it's done correctly so you're not chasing the wrong customer for payment. And something that I do within my own business and businesses that are being FD for is doing a client risk review. So, you know, ranking your customers on a scale of 1 to 5, 1 being a low risk and 5 a high risk. And in Xero, you can mark your customers like this, so you can run a report which will then show you your riskiest customers and how much they owe you. I'll touch on it later as well. There is a really useful piece of software called Target, which I do use as well for clients, and I'll explain that one a bit better later on. But that can really do a great credit review or risk review of your clients. Tip 2 is call your customers. Communication is the key. Yeah, we're in an age now where we do everything by email or messaging, but emails are easily ignored. Emails can be forgotten about. Emails can go to spam filters. So I think calling customers, you know, the old-fashioned way is the best. And when I worked in credit control in my first job, that's what we used to do. We showing my age now, but it was nearly 20 years ago. And email was used, but not as much as it is now. So you had to call, and it just strikes up that personal relationship with the customer. It can help to keep their invoice in their mind if you're telephoning, using the telephone. I used to find just a 5-minute telephone conversation can build a real rapport with your customer or whoever's responsible for paying the bills, and you kind of find that you would go to the top of payment lists if you had that good rapport. And that's something, you know, what my mother used to do when she worked in credit control. She used to have a really great relationship with customers, you know, so much so that they used to send her Christmas presents and things like that, and they really liked talking to her. And you know, customers, when they look at paying you or paying suppliers, they put you towards the top of the list. And I think even more so now with this situation, if we're trying to get cash out of customers where cash is tight, if you've got that good rapport with your customer, then more than likely they'll put you to the top of the pile, or they'll maybe think twice about delaying your payment. Something that we also do now, you can also call the day after the invoice has been received. We do that with some clients at the moment, where we send the invoice and the day after. Some do it by email. I've seen that in the past, but going back to my point, phoning is far better. And so we call the client maybe a day, 2 days after, and just check they got the invoice, see if everything's okay. If you're using Xero, Xero can actually track if someone's opened the invoice and downloaded it or viewed it, so you can actually get a trigger and it says, you know, at this time and day the person's viewed the invoice. So you could actually go and call them then and say, you know, sent the invoice 2 days ago, just checking you got it, everything okay. So yeah, I think out of all the points, this is really key to do. It's really key to have that good rapport, and it is an extension of your customer service for your business. Another little tip: reworking your invoice template. Now, I don't know, this might sound obvious, but I've seen it in the past. I mean, I've had it where I've received an invoice and saying payments due, can you pay it? And there's no bank details. And then you think, oh well, I've got to call them now, or I've got to write to them. Right, I'll put that to the bottom of the pile. So making your invoices as clear as they can be, what the service is, if the customer requires a purchase order number to be on there, follow the procedure that your customer wants, because you just don't want to give them any excuse to not pay you. So make sure the invoice is clear and as described in any sales order, purchase order, anything that you've received from your customer. It's important that you state clearly your credit terms. So what if they're 7 days, 14 days, 30 days, whatever they are, make them very clear on the invoice, and accepted payment methods. And I go back to that point I said at the beginning, where I got an invoice and I had to then follow up, trying to find the bank details. Make sure that on your invoice that they're very clear. Now, if you want some examples or some help with that, again, I can help you outside of this and give you some examples of invoices that we send. And make sure it's not cluttered, which could potentially confuse matters. So, you know, go back to the point of making it clear. Also, making it easy to pay for your customer. So yeah, we touched on making bank details, but there are things which you can put on your invoice. And again, using sort of modern technology nowadays, again, I go back to Xero because that's what we use in our practice for everyone, but you know, things like QuickBooks, Sage Online do the same. When you send an invoice, you can set it up with payment systems like Stripe or Go Cardless. Again, if you want any help on what these systems are, I can do that outside of this. But in Xero, when you send an invoice, if you can set it up, it'll have a link on the invoice that when someone clicks on it, it'll take them straight to the payment screen, and they can just put the card details or bank details. Go Cardless is really good, because if you can set up on Go Cardless, then the payment will be taken on the due date that you put on the invoice. They will receive a notice to say, oh, payment's been taken out in a few days, but at least it's making it very easy for the customer to pay. And if you can do direct debits, and in the past, direct debits were really difficult because you had to put quite a big guarantee down and you have to have a service number. But nowadays, we use Go Cardless, and I think it's one of the best ones. It reconciles everything with Xero as well. So when a customer pays by Go Cardless, it automatically marks it as paid in Xero. So going back to that point, keeping your ledger up to date, this system is keeping your ledger up to date in real time. Keeping an eye on existing customers. This is a key one as well, I would say. You know, you may be credit checking new customers, but are you checking up on your existing clients? Credit ratings can change, things can worsen. Are you doing that? If you don't, then this could pose a real risk. The circumstances change, and particularly in this environment that we're in, circumstances have changed, and the original credit check that you did could no longer be accurate. So it's important you monitor the customer credit scores online. And there are tools out there. There's things like Equifax, which you may be familiar, that's a big one. I've mentioned Citago there, and I don't know if most people know about that, but I think this is a great tool, and I'll come on to that later about Citago and how that can help with credit checks and help with credit control. Well, I'll come on to it now. Citago. So what is Citago? Now, I can't show you a demo of this because they don't have a demo account. So I don't have to be showing you real life data, which obviously I can't do. But the link's there in the presentation. And Citago is a piece of software. It used to be free, which was brilliant, but now they charge £25 a month for it. And what it does, it is business finance. So why they were doing it for free was they were trying to get your debtor book to do invoice discounting. So if you don't know what that is, I can explain that later, but that's what they were trying to do. But they had a credit control function in it, and it was automated, and it linked with your accounting system. So again, it links with Xero, Sage One, QuickBooks, but with Xero it links. And when you put your invoices into Xero and put a due date and say, the due date's the 30th of May, Citago will keep track of it and will actually send out automated reminders just to say, the invoice is due for payment. And if you've got a big volume of debtor books, I mean, notwithstanding the point I made before about it's key to call your customers and have that, verbal communication. But this is a good way to sort of just set automated reminders and keep on track. But the main feature in it is it does credit checks on customers. Now you can pay for a real high level package. I think that's 45 and you get unlimited credit checks. So on the basic one of 25 there are limited, but you still get for free like a high risk risk review report. So it's again, I can show you this, or it may be worth you. I mean, I'm not affiliated with Citago in any way, so it might be just easy just to get a free demo, and I think they're doing it free for 3 months as well. But it can give you an aged debtors report and analyse your customers by high risk, medium risk and low risk. And it's a really good visual tool to help you manage high risk clients. Or do credit checks, and it'll send you warnings to say that the credit rating has changed. Now Equifax and things, they do that, they're good, but they're quite expensive. And I thought, originally when it was free, it was great, but at £25, it's still a good tool to do that, and it does some really nice reports. So again, if there's any clients online, I can link this to your Xero account and show you how to use it, and we can do a demo with it. But I really like Citago. I think it's a cracking tool. Another tip is credit circles. Now, I don't know if you know about credit circles, but credit circles can be set up by trade and industry bodies. So when I was FD in a recruitment business, Equifax did a credit circles for recruitment businesses, and finance FDs and financial controllers and credit controllers would meet every few months, and it was like a round table, and they would discuss things about effective credit control methods, but what also would be discussed is about clients and prospective clients. So there was confidentiality issues, but people would sort of talk about their issues with certain clients and ways to get around it, and it was a really good community. So quite a lot of trade associations do things like this, and if you are a member of a trade association, it'd be worth just looking into it. I found them really useful because you can pick up issues potentially with suppliers coming on board, customers coming on board. If someone else in the group has found an issue with someone saying, we've had this company real problem payer, and if you are about to take them on, make sure you get paid up front, or things like that. So they are really, really useful to attend. I found them very helpful when I was FD in the recruitment business. Number 6, concentrating on the larger debtors may sound obvious, but if you've got your older debts that are consuming a lot of your credit control time, it could be more beneficial to focus on the large invoices. And what that means, you could have lots of niggly debts that are like £200, £300 or whatever is relative to the size of your business, and you spend a lot of time chasing them, but someone owes you 10 grand. So sometimes you just kind of think, well, those little ones, I've just got to, I'll try them, but I need that big one because I need the money. And you might be doing that already. It's something we used to do when I was in credit control at my first company. We had to do a top 10 debtors report, every week, and we send that to headquarters to track the highest value debtors. So it wasn't the age of the debtors, it was just the top 10 value, and we kept tracking those, and that report had to be sent every Friday to see who were the top 10 debtors were, and to be keeping on top, and it helped focus the mind on that. And again, if Satago does something like that, it will give you a top 10 debtors report. Offering discounts for early settlement. This is something that recently with a client we've done who's owed quite a lot of money from a lot of customers, and was getting worried about cash flow. So we did it when I was FD for a big French engineering company called Alstom, and we used to do this, offer a client a percentage discount for early payments. So if their invoice is due in the next month or so, you could say, well, you know, if you pay me within 14 days, I can give you a 5% discount. So I know that reduces your margin, but someone always said to me, you know, margins don't kill your business, low cash will. I mean, margins will eventually, but it's a slower death than cash, and cash is a very quick death. So sometimes offering that discount can provide an incentive for someone to pay you early. And I guess in the current environment, everyone's trying to save money, and if you could say, well, you know, I'll give you a discount if you pay me now, it's something to think about, and it has been effective. I've used it in the past, and it does work. And if all else fails, get tough. This is something that, you know, is difficult to do, but it's got to be done. They owe you money, so you need to follow some steps though when you do this. And it's important, because when you're chasing debt, and I'm not going to go into the legal aspects of it because it's not for me to do, but I can just give you an overview of the process. But one thing you have to remember, if you don't follow the process, even though that customer owes you money, and worst case scenario ever went to court, it can get thrown out just for not following a process, which, you know, sounds crazy, but it does happen if you don't do things to the book. And so I've just highlighted some steps in this presentation, you know, informing the customer of impending consequences if they don't reply to your communications. And then this isn't the law or the rule, it's just what I do and what I've done in the past. You know, I'm not getting anywhere, I'm getting ignored. I'll just send, look, I've sent you a few emails, I've tried to call you, left you a few messages. If I don't hear back, then I'm going to have to do a letter before action. So please, could you reply to me? You've got to show that you've tried all reasonable methods to try and collect the money if it ever did go to court. You know, to go straight to legal actions, go straight to, you know, touch on it later on CCJs and wind-up orders. You know, if it does go to court, a judge will look at that dimly. He wants you to see that you've made an attempt, or made attempts to try and sort this out with the customer. And also, you know, you want to make sure that everything's all right with the invoice, and, you know, they may be ignoring you, but if something's wrong with the invoice and then you go to court and do all the legal stuff and pay the fees and everything, and it's found out that the actual invoice is wrong, then you've just wasted a lot of time and money. So the next stage, once you get nowhere, you can do a letter before action, and that explains to your customer that you're going to commence legal proceedings if they do not pay within the next 7 days. Now these, you know, you can use like solicitors. Thomas Higgins is quite a common one, which a lot of people use, but any solicitor, and letter before actions are expensive. If you want to use a solicitor, a lawyer, then you know, you shouldn't be paying more than £20 for a letter to do that. But before you do that, obviously you've got to be sure that that is the only option left to you, because obviously that will damage your relationship. And then legal action, there are options available to you, like CCJs, county court judgments. You can do this online using the government website, and they're quite easy to do, and they're relatively cheap. You can go to the small claims court. Extreme measures are winding up orders. These things, again, if you've got any specific questions about those, then I can answer that offline. I mean, winding up orders are very extreme. That's kind of you threatening to wind the company up on the ability that they can't pay their debts. that it's expensive. But unfortunately, I've had to use that a couple of times, and when they get a winding up order, believe me, you get paid very quickly, but it's a very drastic measure and can be expensive. We also got to think about, when we're getting tough, that customers may be benefiting from the government support like business rates grants, job retention scheme and business interruption loans. So yeah, they might be pleading poverty and things are tough, but people are getting benefits and they are getting support. So, you know, you got to bear in that mind when you're asking for money. So that's 8 tips that I have about trying to get your cash in. Gaining confidence to ask for cash, and this is something. I mean, again, this is on the back of a client of mine, and she was saying that, you know, she didn't feel confident at all about asking customers to pay, especially in light of what's happening. And you know, I said to her, look, most people are pleasant, most people want to be helpful, and most people want to do a good job. So, you know, just try and build a connection with them in the same way your sales team did. You know, I touched on it before, that your credit control needs to be viewed as a customer service. It's dealing with the customers, customer service. It's dealing with your clients, so it is an extension of that customer service team. Yes, it's asking for money, but it really is an extension of your customer service. That's the face of your business that your customers are dealing with, and you know, it's important. It's viewed that way, and not as the nasty sort of you know, debt collectors that sometimes they can be viewed as, because that no matter how good a product service that you do, that can really damage your reputation and relationship with the customer. So how do you do this? Well, I was having to think about this, and from experience, and I made a few points here. So, you know, just before you're going to make the call, take a couple of minutes just to prepare, decide what you want to get out of the call, have a crib sheet if that helps, you know, how you're going to do that so that you can engage with your customer and get the outcome that you planned. If you know what you want before you make that call, then you know how to steer that conversation and getting what you want. And ideal situation is getting paid. You know, giving the customer undivided attention while you're talking to them, you know, treating them with courtesy and respect, be sympathetic. It is a difficult situation that everyone's in. But if you can do this, they can feel important, valued, building that rapport. They'll appreciate your good service and they'll like you for it. And again, it goes back to that key communication, point 2, which I said was so important, is building that rapport with the customer. And when they are looking at their debts and looking at who to pay, if you can have that good relationship with them, more than likely you're going to go to the top of that list. Also, have a think about what questions you could ask yourself so that you are prepared and get what you want out of the call. So, you know, prepare for some of the questions that they're going to think. You know, you've got experience, so you know what people will ask, and try and write them down so that you're prepared for them when they come. Think about what you could stop doing, start doing, so that your customers feel more valued and get to like you more, you know. So, you know, again, building that rapport with them, having to think about before you make the call, you know, how am I going to get this customer to be amenable to paying me. You know, if you know them, anything about them personally, if you know anything about them, you know, have the crack before you get into asking about payment. Be sympathetic to the situation. A lot of people going through a difficult time, but always remember in your mind, you know, going back to this client of mine where she was saying she didn't feel confident in asking for money. Remember that if you're chasing the money, you've done exactly what they wanted. You've provided your product, you've provided your service, and you know the customer's expecting you to ask for that money. I mean, not just in this current circumstances, but perhaps more so now. People will see that, oh yeah, I've got the invoice. Well, I'll wait till she calls me. I'll wait till I get a message to ask, and I'll leave it there and I won't pay it right away. So, and that happens, and you see that, and so they are expecting to ask, and more often than not, if you then ask them, they say, right, oh yeah, well, I've had that reminder now, or he's asked me now to pay it, so I'll pay it. So yeah, hopefully found that useful, those key points. So how can we help? Well, we're accountancy practice, so we can keep your records up to date. We can put you on some of this software like Xero, Satago, help with cash flow management. We can do your credit control function. We do have that ability to be able to outsource the credit control function to us, but there are specialist credit control companies out there as well. Again, we can recommend some to you if you wanted to use a credit control company. We can recommend other software, so like I mentioned, Satago, Float is a cash flow tool which can also help. Really, it's really useful, that one. That can give you a real-time cash flow view of your business, and you can keep track of debtors through that. And just other tools. I touched on Go Cardless and Stripe, and making it easy for customers to pay you, just to make that whole process a lot more automated and slicker. We can also introduce you to partners for things like credit insurance and debt finance. So debt finance is when people will finance your debtor books. Again, I won't go into too much detail. If you want to know what that is, feel free to reach out to me offline or after this meeting, or if we've got time for the question and answer, then we can talk about that. But yeah, so that's how we can help, and just share my experience as well on any specific matters. So that's the presentation. Hopefully you found it useful. I touched on about credit insurance, and I came across something that I think was really interesting. It was at a networking online networking event at SciTech in Daresbury last week, and a lady called Lisa, who's on the presentation now, on the webinar, talked about this product called Nimbler. So I think, Lisa, if you're ready to just give an overview to this to everyone. I know I've introduced you to a couple of clients already, and two of them are pretty keen on signing up after seeing this. I'm just going to try and switch you on how to get you to talk. So just bear with me 1 second, because I'm still new to all of this. I'm just going to stop sharing. Oh, that. Okay, Lisa, I've put you on allowed to talk now, so if you'll mute yourself.
Can you hear me?
Does that work?
Is that working? Can you hear me at all? No. Oh, is that working now?
Hi, Lisa.
Hi, can you hear me?
Yeah, it's very quiet.
Yeah. Oh, right. Okay, I'll see if I can turn it up. I think, just 1 second, I might be able to. Is that better or worse?
Let me just check it's not my computer. I don't know if anyone else can hear you. It is very quiet.
Is it? Okay. 1 second, I will just...
I'm just seeing if it's my settings, so apologies.
No, I'm just...
Oh, there you go. I can hear you. So yeah, that seems, yeah, and someone else has said he can hear you. Okay, so that's fine. Yeah, that's great. Thanks, Lisa. Yeah, so I'll share the screen again just to show that slide of which you kindly sent to me.
Okay.
Give me a second. There you go. So where's the presentation? There you go. Yeah. Okay, there you go. So okay. Yeah, over to you, Lisa.
Okay, brilliant. Well, thanks, Rob. And for the couple of your clients that I've spoken to already, I think they understand a little bit more. Some of your clients may have come across credit insurance in the past. Traditional credit insurance is based on an annual turnover policy. So all of the debt that you have and all of the customers are usually paid for on an annual basis by an annual premium in a standard insurance way. The insurers then, as you possibly touched on, look and review on a quarterly basis the solvency of all of their customer base. That means your customers could also be their customers in a different way as well. It's a slightly different insurance in that if the insurer or underwriter deems the risk to credit coverage too strong, even partway through an annual policy, they will pull cover. So it's very linked to the finance and the banks and how all of the performance of the businesses are performing over the full 12 months. So in no way is credit insurance guaranteed. That said, usually you can also gain insight into new customers by utilising the intelligence that are gained by underwriters who often have a little bit more information, a little bit ahead of what you may have for your own customers. So it's a really good resource for you to check for new customers. The Nimbler offering is completely different. It's taking on an invoice by invoice basis. So no longer is there a need to insure everybody that you have a trade with. You may have some that you are really confident, known them for years. You're wondering why on earth you're paying for insurance for somebody that you know you will never claim for. But there may be some that you would like to trade with, but they are quite risky. That is where Nimbler can help. They will do coverage on an invoice by invoice basis or on a client by client basis. They can link their system to your accounting system, whether you use Sage, Xero. There's many of the systems, and they are constantly evolving because it's the first offering in the UK that we've ever seen on this basis. And the sole purpose of this is to help small to medium-sized companies continue to trade even before this situation arose. I've been speaking to Nimbler for well over 12 months. They are also trying to evolve into an annual policy for specific clients as well. So if you say, oh, I've got 5 different customers, one of whom I'm concerned about, but the other 4 I'm not in any way concerned about, they are trying to evolve where they could give you an annual policy purely for that one client as well. Now, that's not available yet, but it is something that they're working on. The Nimbler, again, is only for customers who go into insolvency. However, if a customer owes you money, they haven't paid, but they're still solvent, they will assist with a debt collection service in order to help you to maintain and hopefully, recover your losses. It's backed by an A-rated insurer who themselves are very involved in the credit insurance business, but again, they only offer annual turnover policies, not this sort of bespoke offering. To get cover via Nimbler, it is really simple. There's a link that I think Rob has probably shared to everybody, and it's a simple case of clicking on that link, signing up, or there is another option as well. Just if you just want to have a look around, and I'll share that with Rob later. It's sort of, I think it's www.nimbler.com/limits. And if you just insert the name of or the registration number of the company that you want to inquire about, the system will provide you with details of what their maximum limit available to everybody is, and it may be 100,000, 150,000, and the maximum amount per invoice that they're able to offer at this time. It's almost a form of crowd protection in that if they have a limit of 100,000, that's available to everybody that signs up to their site, but it may be that in total it's 100,000, but they'll insure no invoice bigger than 5,000 to ensure everybody gets sufficient coverage. Conversely, if you have a look and there is no company registered for the client that you're looking at, there's a chat box. And if you say, do you cover this X customer of mine, they may say, no, we've never been asked for that customer before, but it doesn't mean to say that they can't do it. And if you give them 24 to 48 hours, they will go back to the A-rated insurer that provides them with their capacity, and they might be able to get it for you. In addition, if they are up to their limit on the amount of capacity they've got for one particular company, and you say, look, I'm just about to issue invoices, I usually insure with you, you don't seem to have any left, they will go back and try and purchase more as well, so that they can give you the continued coverage, because they'd rather have you as a client than not have you as a client and have you potentially at risk. They are really open to new ideas and ways of protecting credit insurance, and I have regular contact with their CEO and discussions, and I just can't, sort of recommend them highly enough, particularly where you are concerned about the insolvency of a customer. I think that's me. I'm trying not to bore anybody too.
No, that's great. Thanks, Lisa.
Okay.
No, that's perfect. Thank you very much. Has anyone got any questions for Lisa while she's on? As I said, when I send this link out to the video and presentation, I'll put, if it's okay with you, Lisa, I'll put your contact details on as well with a link to the website as well.
Yeah, absolutely fine. As I say, any questions, or go in, have a look at the link. I will forward the limit link as well, because that allows everyone to just have a quick look round, put in your existing customers and clients as well, because sometimes Nimbler will say no, and they might give an explanation as to why, which again could help with future trading with that client. I did have a conversation, actually, I did mean to say, with one of the contacts that you sent over, Rob, and he was concerned about invoices that were already overdue. Unfortunately, no insurer will provide you with one that's already overdue.
No.
Nimbler will provide coverage for up to, I think it's currently standing at, might have been going to be between 120 and 150 days credit. And if you're a bit slow putting the invoice on, that's fine. I think you alluded to it in a previous connection with your client. Provided it's up to 50% of the way through the invoice, and there's no immediate concerns, it can still be insured.
Yeah. Great. No, thanks, Lisa. That's really good. Yeah, I really like that system, and I think the clients that spoke to were really keen to sign up to it. So no, thank you. Okay. Oh, great. So yeah, that's kind of everything on the presentation. I hope you found it useful. Let's say some of it may even be obvious, but sometimes it's helpful just to bring the obvious to mind, because you might not think about it. I'll go to the question and answer box now. Well, we've got time, we've got 15 minutes, but I won't spend 15 minutes if there's not enough questions. I'll end it early. But I've got a question there from Richard, and he says, as you know, rightly or wrongly, some of our work involves commencing before contracts agreed and signed. Do you need to have a signed contract to ask for payment? I mean, legally, yes, you would if it ever got to court. But there is a case to say that what's called deemed acceptance. Now, I'm not a lawyer, so the caveat is, this isn't legal advice. But if you're doing work for someone and they've accepted that work, so if you provide a product and they accept delivery, and just because you haven't got a signed contract doesn't mean that they're not liable to pay. They are, because it's deemed acceptance. They've accepted it. That's because they haven't signed a piece of paper. If you provide a service and they accept that service, then they've accepted it. So that bounds them to pay you just because they haven't signed a paper. Whereas signed contract, like I say, it's good housekeeping to have. It's good to do, and if you ever had to go to legal, it will strengthen the case. But from experience, when I've seen it, I'm sure there's case law out there, and as I said, I've personally experienced it where a signed contract hasn't been in place. In fact, I'll give you a very real one now. I'm a trustee on a charity, which is a care home for Army veterans, Broughton House in Salford, and they're building a new care home. It's a £14 million new care home, care village, and the design contractor, has been on site for 2 years. And for whatever reason, the charity has never signed the agreement. The contract's huge and it's never been signed. And there was a couple of issues with their work, and the charity was saying that, we don't want to pay this and want to pay that. Long story short is the fact that the contract wasn't signed is irrelevant. The fact that they've done the work and the work's been accepted means that they have to pay it. So so yeah, so hopefully that answers your question there, Richard. But again, as I said, I'm not a lawyer, so I can't give you the legal advice. And if there is you know, if you have got a lawyer, just run it past them. If you want a connection to one, I've got one that can help with that as well. Any other questions? No. Okay, well, I'll end it there then. Hopefully, like I say, hopefully you found that helpful and useful. And I will send this presentation and the video as well to you. I'll do it today, and with Lisa's contact details if you wanted to contact her about the credit insurance product. All right, well, hopefully you're all doing well, and I'll speak to you soon, and take care.